Okay, good afternoon everyone, and I want to begin by providing some context for the set of economic and budgetary forecasts we are publishing today in the Stability Programme Update. The Government has a legal obligation to provide the European Commission and Council with an update on its economic and fiscal position in April every year. The SPU is published in draft form, and this is in order for the Dáil to have the opportunity to debate it, which will be taking place on Thursday, and my department will then submit the finalised version to the European authorities at the end of the month. Given the extraordinary economic situation that now confronts us, we have kept our assessment to the current year and to next year. And it is important to note that these economic forecasts have been endorsed by the Irish Fiscal Advisory Council as is legally required. I now want to turn to these forecasts. As you know, we in Ireland, alongside most of the world, have but a series of restrictions in place in order to limit the spread of the coronavirus. Because of this, we now expect gross domestic product to contract by around 10.5% this year. We are clearly now in the midst of a severe recession, both domestically and globally. And I want to stress that because of how much uncertainty there is around the coming months, that the publication today is a scenario. It's not a forecast per se. There continues to be lack of visibility about the path ahead due to how many factors are beyond both our control and our understanding to call some of these numbers forecasts in the normal sense. Our projections today assume that the current containment measures remain in place for 12 weeks and that they are gradually eased thereafter, but that scarring effects and uncertainty mean that recovery in the second half of our year in our economy will be gradual. If containment measures are not lifted, and if this is a function of what is happening with our public health, then the economic effect will clearly be more severe. And the publication of the Stability Programme Update today includes consideration of various scenarios to this effect. So there is very considerable uncertainty attached to the numbers of today. There are indeed large risks with them, including a prolonged change in our economic circumstances, depending not only on containment measures here at home, but of course containment measures in our main trading partners. In the space of a few weeks, our jobs market has transformed from a situation of full employment to one where unemployment has risen with a speed and scale that is completely unprecedented. The gradual recovery assumed in the second half of the year is projected to gain momentum next year, with the economy growing by approximately 6%. And as the experience of the last financial crisis shows, our economy and our labour market are resilient, and they do have real underlying strengths that were there before this crisis, and this crisis has not altered. And moreover, we are entering into this challenge because of a health crisis, not because of imbalances in our economy or because of mismanagement of the economy. In fact, none of the imbalances that characterised our economy previously, and in particular credit growth and the balance of payments deficit are evident at present. So once the pandemic is contained, we will recover. That said, some sectors will recover faster than others, and we believe it will be approximately 2022 until we see economic activity begin to resemble or match where we were at this pre-crisis level. In budgetary terms, the responsible way in which we have managed our public finances in recent years now really matters, because we are in a position to absorb a short-term increase in borrowing. As you know, we achieved a surplus of 0.4% of gross domestic product last year. For this year, before the pandemic hit, we were on track for a significant acceleration in that surplus. But for now, a sharp change in our fiscal balance is now expected, with a general government deficit of €23 billion, or 7.5% of gross domestic product. These figures here today, as the publication makes clear, assume, however, a number of very important conditions. They assume a gradual improvement in our public health. They don't include any further economic decisions that the government makes, because the Stability Programme update is prepared on a no policy change basis. And more broadly, this does not include the cost of any other policy decisions that could be made later in the year. So the publication of the SPU today, as John will outline in a moment, acknowledges, on the basis of government decisions that are already made, a general government deficit of approximately 7.4%, but does outline a number of scenarios in which that deficit could grow further as we move through the year. And this is a combination of measures that aim to support households and firms and deal with the consequences of falling tax revenue. It is entirely appropriate that the government uses policy to cushion the blow of this extraordinary crisis. In fact, the very reason we did run surpluses after balancing our books in recent years were to have the resources and, crucially, the credibility available to us in the challenging times like those we currently face. The government is committed to supporting our citizens, supporting businesses, and supporting the economy of our country during this crisis. The Stability Programme update allows for an increase in expenditure of approximately €8 billion on previously announced figures to account for measures taken in response to the COVID-19 crisis, and also to fund income supports over the second half of the year. In particular, up to €2 billion is to be provided to support our health services, to boost capacity, to purchase PPE, and to hire new staff. To support our citizens during this crisis, the measures agreed by government over a 12-week period provide at least €4 to €4.5 billion in income support, sick pay and illness benefits for impacted workers. The additional funding has been provided based on current projections and will be revised to take account of the changing public health position. The debt to gross domestic product ratio is now forecast at 69%. This is an increase of 10 percentage points. Meanwhile, debt to gross national income modified is projected to increase to 125% for this year. To put these figures in context, the IMF is projecting that the euro area average deficit will be 7.5% of GDP this year, and that the average increase in the debt ratio will be approximately 13 percentage points. So the budgetary position of Ireland is very much in line with the norm for other advanced economies responding to this crisis. We do start from a position of strength. We ran a budget surplus over recent years. We do have significant cash reserves, and we have a restored reputation in the financial markets. The European Council has also agreed to activate the so-called General Escape Clause of the Stability and Growth Pact. This will suspend the fiscal requirements under the preventative arm. However, an excessive deficit procedure could still be launched at a later stage, as the deficit limit is enshrined in the Treaty on the Functioning of the European Union. However, most, if not all, other EU member states will face similar circumstances. Our response to the economic crisis that has developed from the public health crisis has been swift and forceful. We have prioritised both saving lives and preserving livelihoods. The overall approach has been guided by the need to limit longer-term scarring effects to our society and to our economy. This is how we will ensure the fairest and the fastest possible recovery. A national recovery plan will be published. It will chart a course out of this recession. However, the foundation of this plan will require the continued good management of our public finances. And due to this, in the past, the NTMA had €22 billion of cash reserves available at the end of March. Part of this was used to refinance an €11 billion bond that matured yesterday. Later today, the National Treasury Management Agency will announce its revised 2020 bond funding range schedule. It does this with a state that is in a strong position to fund the deficit that has developed. And from this position, we will rebuild our economy again. As with the recovery of our public health, it will require focus and it will require time. But we will recover our public health and we will renew our economy. Thank you.
Okay, thank you. I can be very brief because the Minister has covered quite a few of the points. As you know, the Stability Programme is prepared against the backdrop of a global pandemic, the first in 102 years. And all over the world, governments are closing down non-essential parts of the economy in order to suppress transmission of COVID-19. The result will be the deepest recession since the Great Depression of the 1930s. But it's not just the depth of the recession, it is also the breadth of the recession. So if you consider the global financial crisis of about a decade ago, that was very much an advanced economy phenomenon, whereas the current recession is very much a global phenomenon. And we will have, for the first time since the Great Depression, both advanced economies and emerging market economies recording negative growth. Okay, so it is very much a synchronized shock across the global economy. In terms of formulating the forecasts, then we're looking at the external environment, looking at growth in our major trading partners. We've taken these numbers from the IMF World Economic Outlook. One point I would make there is the oil prices, for instance, in 2020. We haven't taken into account the fact that this time yesterday oil prices were minus $37 per barrel, but let's assume that's a one-off. Okay. So in terms of the economic outlook for Ireland, then we estimate that the sectors directly affected by closure and so forth account for about 20% of Irish GDP. Okay, a little bit lower than in other advanced economies, because as people here will be familiar with, GDP in Ireland is quite distorted by, you know, the large multinational sector and so forth. But what that means is that for every month in which these sectors are closed, the level of GDP is reduced by somewhere between 1.5 and 2 percentage points. Okay? The shock is, of course, both a demand side and a supply side shock. When I say demand side, I mean the demand for goods and services has obviously declined. We simply cannot go to the shop to buy clothes and so forth. But also the capacity of firms to supply goods and services has been impacted, for instance, due to supply chain issues and so forth. As the Minister mentioned, a big concern from a purely economic perspective and not from a health perspective is the possibility for permanent or scarring effects of the crisis. In other words, that firms and employees may permanently exit the market. Okay? So policy in this area then has been designed, if you think of the wage subsidies, to keep employees close to the labour market, because there's a lot of research in this area that shows that the longer employees are away from the labour market, it tends to impact on sort of re-entry and so forth. And the second part of that then is providing liquidity supports in order to maximise the firm's survival rates. Okay? And again, as mentioned by the Minister, we are treating this as a scenario rather than a forecast per se. So in terms of what the numbers are, as the Minister mentioned, we're looking at a fall of GDP of about 10.5% for the year as a whole. Crucially, this rests on the assumption of a gradual recovery from Q3, picking up a little bit then in Q4 and recovering then in 2021. That, of course, depends on the epidemiology of the virus, on the success of containment measures, as well as the development of therapeutics and vaccines and so forth. Okay? And if you look at the first two quarters, and I stress the quarterly profile is very, very indicative in this regard, this would be a decline of about 23–24% over the first half of the year. But for modified domestic demand, which some of you will know strips out some of the weird stuff in Irish GDP, the decline, if you look at it over the first and second quarters, would be about a third, which is actually quite similar to what the UK authorities, the Office of Budgetary Responsibility, has looked at for the UK. I want to stress that in our view, the recovery is gradual and it is partial. And I say partial in that the level of GDP is still below the level what would otherwise been the case. And when I say otherwise been the case, the top line there, which was our scenario set out in January that underpinned the sort of fiscal space estimates as part of the election. Okay, so even at the end of 2021, the level of GDP is below what would otherwise be the case. The key takeaway from this, I think, is that we in the department are not forecasting a so-called V-shaped recovery. It is more of a U-shaped recovery. And I think there's a nice box for those of you who are interested in these things. We've incorporated a box in the stability programme trying to spell out what is a V-shaped, what is a U-shaped, and what would be the worst case scenario, which is an L-shaped type recovery. Turning then to the labour market, where it's fair to say that the situation has effectively been turned on its head. In January, we were concerned that the economy was potentially overheating. We were at full employment and so forth. And it is likely that in Q2 of this year, the unemployment rate would reach 22%. I asked one of my colleagues yesterday to look at when this may have occurred in the past. We looked at and saw a figure in 1983 of about 18%. So this would be very much the largest on record. Turning then to the fiscal side, I don't want to say too much on the policy response. It is, of course, a matter for government rather than officials. But I think it is fair to say, as the Minister mentioned, it has been swift and forceful. On the expenditure side, about $8 billion has been provided above and beyond what we call the revised estimates volume, which was published in December. And there are, as well as the discretionary measures, there are what we call the automatic stabilisers, the automatic increase in unemployment beyond what might be related to the pandemic. Then turning to the public finances, we see tax revenue, which last year amounted to about $59.5 billion. We see it falling to $49.5 billion for this year. And if you think, I think I was here a couple of weeks back talking about the exchequer returns, and I mentioned a 20% year-on-year fall in tax revenue in March. So those sort of tax numbers are very much in line with that. So when you take that into account together with the expenditure measures, we are looking at a general government deficit of the order $23 billion for this year, which is about 7.5% of GDP. And again, that is contingent upon recovery in the second half of the year. What it does mean is that there will be a temporary increase in public indebtedness. In pure money terms, last year total public debt was $204 billion. At the end of this year, it will be about $218 billion. I stress the word "about" because there's so much uncertainty at the moment. So please treat these figures, we're doing our best, but obviously it's unprecedented levels of uncertainty. Minister mentioned a 10 percentage point increase in the debt ratio from 59% to 69% of GDP, and about a 25% increase in the debt to GNI star ratio from just under 100 to about 125%. Minister also mentioned the $11 billion bond that was redeemed yesterday. There is an additional bond that falls in October of this year, about $6.5 billion. And we have a small amount of bilateral loans to the UK that also fall due. Absolutely crucial here is that there is virtually no redemptions for next year, okay? Other than about 400 million that we need to repay to the UK as part of the bilateral program that was agreed a decade ago. I just want to stress that the grey bar in 2021 there, that does not need to be refinanced next year. That's an EFSM loan. Okay, that's automatically rolled over by the European Commission because there was an agreement back in 2012 to extend the maturities. Okay, so the earliest that would fall due would be 2027. So with no redemptions next year, that gives us obviously quite a bit of breathing space. Then I think the Minister made a very valid point then on the deficit and how it compares with our compatriots across the euro area. And just to re-emphasise the figure, our deficit, about 7.5, is very much in line with the euro area norm. Okay. The second graph, the graph on the right, shows the increase in public indebtedness as a percentage of GDP. These are all based on IMF figures, and you can see an increase of about 10 percentage points. That's the 59 to 69. The increase in the rest of the euro area is about 13 percentage points. I'm coming to the end, so this is just a summary of the sort of key macroeconomic variables: GDP, modified domestic demand, and the key fiscal variables. You will see them set out in the stability programme. Just two more slides I want to show you then. Obviously, in finance, we like to focus on risks, and especially the downside risks, which I think it's fair to say dominate at the moment. So what I have here is a chart. It shows the baseline scenario. I think it's in dark green. Excuse me, my glasses aren't particularly strong. That's the baseline scenario, but that's based on recovery in Q3. We then have two additional scenarios in which the containment measures are relaxed, not in Q3 but in Q4, and then a very severe scenario in which the measures are relaxed not until the beginning of next year. And in those cases, instead of GDP of minus 10.5, it would be closer to 14 under the first scenario and closer to 15, 15.5 under the second scenario. Okay. I think I'll leave it at that. What I have is quite a lot of detail then, which is more it's detailed, and I can certainly answer questions after this, but I won't go through them here.
Okay, thanks for good questions. And move to the mic on my side to ask questions. Yeah, Robert.
Minister, a question on the National Recovery Plan. Is that contingent on a new government being formed? And what would your priorities be in a National Recovery Plan? And then a quick question, just for clarification. You said that the income supports that you have allocated money for them to be extended into the second half of the year. I'm just wondering if you made a decision on whether or not to extend the COVID payments past the 12-week period. Thanks.
So I've made no decisions at all to extend any of those programmes beyond that which is already agreed by the government, and in particular the wage subsidy scheme is due to come to an end after a 12-week period. The stability programme update is absolutely only made available on the basis of policy decisions that are already made. So any further decisions that are made about the wage subsidy scheme or any other policy measure would impact on the figures that are published in the SPU today. In terms of the National Recovery Plan, the Taoiseach has already indicated that a National Recovery Plan will be needed. I would expect that this will form the subject of engagement between the different political parties who may decide to be part of the process that will lead to a new government. It is important to emphasise, though, that there are some decisions that do have to be made in advance of this. And for example, the setting up of the wage subsidy scheme was a decision that in normal times would be part of a National Recovery Plan, but had to be made by this government in advance of a new government being formed. And while I'm not aware of any other decisions that need to be made that are like that, I also cannot rule that out happening in the coming weeks and beyond that. In terms of what my own priority will be in putting this together, in putting a national reform plan together, national recovery plan together, and in the upcoming negotiations that I hope will intensify, there are two. The first one is getting people back to work in our country. The increase in the live register, the number of people who now have to rely on the pandemic payment, is a source of huge social strain and of course poses a great economic challenge. And the most important thing that we can do socially and the most important thing we can do economically is get people back to work in our economy. And as soon as the public health guidance facilitates that, that would be a matter of huge focus for me and for the Cabinet of the day. The second priority then will be over time, will be reducing our deficit and then getting to a position over time when our economy is recovering of again our national finances being broadly balanced. The reason why we are in a position now to be able to access the kind of funding that both John and I have touched on is because of the progress that we made in actually getting to a surplus and because of our credibility with the financial markets. And that is tested at times of need like now. And I know that it will be important when our economy is recovering to get back to a similar position again.
Sean,
Minister, can you give people any sort of idea that whenever these restrictions do start to be unwound, what's likely to come first? As in, is it going to be construction coming back? Is it shops or whatever it is? And you've given the few different scenarios there, but do you see at any point there being the economic and social impact that the restrictions are having outweighing some of the health advice that is coming, and that the government having to make a decision on that, which outweighs the other? And then just finally on government formation, you're obviously trying to entice other parties with a document that has a lot of promises. Given these figures, how are you going to pay for them, and how are you going to get those parties on board?
Okay, considerations. Okay, and sectors. So, thank you, Sean, for your questions. In relation to have any decisions been made yet regarding what parts of our economy would be prioritised for reopening, that has not happened. The COVID Cabinet Subcommittee met yesterday afternoon, and I participated in all of that discussion, and we are not yet at a point where we can give an indication to the country, or indeed conclude on this within government, regarding what parts of our economy could be prioritised for opening sooner. While we are seeing some encouraging signs in the efforts of our country to contain COVID, we also know that there is much that still needs to be done, and indications that our public health experts and the Cabinet have to be happy with, and we're not at that point yet. I know that this is something that the Taoiseach has discussed publicly. I think he did so with you all yesterday. And that leads to your second question regarding the differing trade-offs. And in truth, for me, the most important foundation of an economic recovery is our country having confidence with where we stand with our public health. So at the moment, trade-offs between economic considerations and public health considerations are not apparent to me. It's not inevitable that they will develop. And one of the reasons for that is, in the Stability Programme update today, it acknowledges the risk regarding what could happen if consumer behaviour changes in really important ways in the future. And those changes in consumer behaviour could be independent of any guidance that government gives. And in order to get consumer behaviour into a place where it is capable of allowing our recovery, as has been outlined here today, that we believe can gradually begin in the second half of the year, I think the essential part of that is our country at large feeling confident that the efforts of our country to deal with COVID-19 are successful. So I have not seen those trade-offs yet, and from all of the discussion I've had in the COVID Cabinet Committee and with the HSE and with the Minister for Health, we are all aware that we can only begin the process of reopening our economy when we're confident with where we stand with the health of our country. And that's an assessment that I fully share. In relation to the document and looking to entice other parties in, other parties have to decide whether they want to be in government or not. And that's a matter for them to decide, where I've always acknowledged it's up to every other political party to make a decision regarding whether they want to enter into government. What this document is doing today is just acknowledging the huge uncertainty that will surround the global economy for a period of time. And I'm absolutely confident that the Irish economy can recover. I'm certain that we can get many of our citizens back to work once we're clear where we stand with COVID. But I also want to equally be clear that one of the consequences of doing this is we're going to have a large deficit, and that over time we will need to reduce that deficit again. And that's laid out in the document of last week. And in terms of the affordability of that document, I was involved in the drafting of that document, and I was very careful, as were my other colleagues in that process, not to be making very explicit commitments that I would be concerned about in the future. We're saying that we're committed to slow and care. We're saying that we want to build more homes. We're saying, for example, that we want to make progress in continuing to reduce homelessness. Over a 4 to 5 year government, you can make progress on all of those things. But it's equally the case that the early phase of the next government will be dominated by dealing with the consequences of COVID-19 for our economy and for getting our economy back to work. So what this document is doing today, I hope by being clear about our levels of borrowing, about our deficit and the employment challenges that we might face, is making clear the work that is to be done. But I'm very confident that a new government, if formed, if it has a majority, can make progress on all of this.
Thank you very much, Minister. The assessment here assumes a gradual unwinding. When, in the assumption, do we get this gradual unwinding starting? Does the document assume the unwinding starts on the 5th of May, which is when the current lockdown phase is due to end? Secondly, how realistic is it for you as a political leader to suggest to the people that these very large deficits can be bridged without increasing taxation, for instance, in a scenario where you are forecasting unemployment above 22%, as John has said, record levels of joblessness? Thank you.
Thank you very much, Arthur. So the document assumes the scenario that is outlined here today assumes a very gradual change as we move into the second half of the year, but that the measures that we have in place will continue for all of quarter two. But the document also, as indeed John highlighted in his presentation, also outlines other scenarios if the public health guidance that has been issued at the moment doesn't change. So that is laid out, but for the figures that I have touched on today, it assumes a very gradual change of them from the start of the second half onwards. In terms of where we are with the commitment in relation to taxation, the commitment in relation to taxation touches on income tax and it touches on the universal social charge. And the reason why I am making that a policy priority is the document today describes what we believe are going to happen to people's incomes across this year. And we are expecting that the income of many citizens will fall. And if we are in a position that we add to falling incomes, also rising taxes on falling incomes, our judgment is that our ability for our domestic economy to recover will be further impaired. And the government that I was a member of from 2011, the government I represented from 2011 to early 2017, we made many changes in economic policy across that period, but managed not to change USC and income tax rates. And I believe that was a really important factor then in our domestic economy recovering, and I believe the same will be the case if as we face into how we get over 1 million people off income support from the state.
Arthur, maybe just add a little bit on that. You can see from the chart over there that you can see a quarter-on-quarter fall in Q1. You can see a dramatic quarter-on-quarter fall in Q2, but then things pick up in Q3 and Q4, albeit still below the level that would otherwise have been the case. And then the gold and light green bars assume, if it doesn't happen in Q3, it happens in Q4 and so forth. Okay? Just on taxes and how things might improve next year, we're looking at a deficit of about 4% next year, 4.5, I think it is. Actually 4.1. It must be stressed. That is because the economy is recovering next year. I mean, we have a 6% recovery in real GDP. Okay, so that automatically brings taxation up with it. And also, if we get the relaxation of the containment measures, the one-off supports that were provided for this year are by definition unwound. Okay, so you'll get that sort of improvement on the public finances automatically without any discretionary changes. Okay.
Minister, you've made the commitment on the tax side of things, but is it not getting to the point where some sort of austerity, a return to austerity, is becoming increasingly inevitable, either later this year or early next year? And a question for John with regards to the severe downside. You've given the headline GDP figure of 15.3. Do you have a figure for the domestic demand, or the real economy?
So if we define austerity by the reduction of government expenditure and a significant increase in all personal taxes, and that was the period and the experience that many had when we went through the awful crisis that began in 2008 and for many people only began to lift in recent years. If I look at where we are with public expenditure will go down versus where it is at the moment as our economy recovers, but I expect it will be higher than where we were in the pre-crisis period. And the reason why I expect it will be higher is because I expect that there are changes that we have made in our health service that will be retained because of the continued need to retain confidence in public health in our country. So the kind of experience that we went through in those 5 to 6 years that began in 2008, I'm very hopeful that if the right decisions are made globally that we can avoid. But I equally want to be clear that in discussions that will begin regarding recovery, in discussions that will begin regarding other things that our society and our economy will need, we won't be able to do everything there either. Choices will have to be made. Decisions will have to be made regarding how we get the balance right between an economy recovering, between our deficit reducing over time, and meeting expenditure needs that are there within our country. And that has been my experience over the last number of years, and I expect that the Minister for Finance of the day, or the Minister of Public Expenditure of the day, will have to continue to make choices regarding where the money of the taxpayer is allocated. So the measures that we have in place now, the expenditure that is in place now, as our economy recovers, will have to reduce. But I would expect that we will also have some of what is happening at the moment retained in our health service for a while to come. So if I look also at what is going to be important to prioritise as we work through the challenges that are to come, the issues that we heard in relation to housing in particular, I know are still there, and we will need to be able to spend the country's money to be able to ensure that we continue to build more houses in particular.
Paul, then you asked about modified domestic demand. I think, when we were doing the alternative scenarios, we kept it at a very headline level. In particularly, we only looked at two variables, namely GDP and what the impact on the deficit might be. Okay, so you can see the scenarios for GDP there. I haven't put them up on the screen here, but it is in the text of the programme itself. We say that if recovery is delayed beyond the first half of the year, that it doesn't take place in Q3, the deficit could be up to 30 billion for this year, 10% of GDP.
Minister, just on consumer spending, if you're talking about income falling for people over the next year or two, some other countries have had some, I suppose, interesting out-of-the-box thinking of how to actually get people to take money out of their pocket, at times of crisis like this. Is there any sort of incentives that you might be looking at, be it VAT reductions for services or what sort of thinking is going on behind that. And also just on keeping businesses going, obviously there's been a lot of talk about the seasonal workers needed for some of the food production markets like Keelings. That was being discussed, I think, today, possibly about an update on whether these are essential workers, how we're going to perhaps fill that gap of those foreign workers coming over, and whether Irish people will be tasked to take on some of that work. And thirdly, sorry, just on job stimulus, obviously with such a huge unemployment rate, I'm just thinking in the past we've had some schemes like Job Bridge, Job Path. Is there any sort of indication of any sort of job stimulus the government is looking at in terms of perhaps getting businesses that are already in existence taking on workers, be it through tax incentives or anything like that?
So I might deal with your questions in relation to consumer spending and also in relation to getting people back to work together. This will form a really important element of a recovery plan that will have to be put together for our country, and we will give consideration to policies that will be needed to encourage our citizens to spend money at a time in which our public health guidance allows it, and also to what measures we need to put in place to encourage employers to recruit again. But I'm not in a position to be able to indicate what that is now, because the government has not made any decisions on these matters, and also because our public health guidance at the moment doesn't facilitate that happening. In relation to seasonal workers, as Minister Humphreys indicated earlier on today, seasonal workers are seen as very important workers for allowing food to be made available in our country and for allowing really important parts of our economy to be able to operate. And what will be announced soon will be measures where we can ensure that those who are travelling into our country for work, that they are implementing the public health guidance that has been issued here by the government here in Ireland. Keelings indicated that they weren't able to get the workers that are needed to do this work from our own country, and that is why they made the decision to bring workers in from abroad. The crucial thing that happens is, as this takes place, is that public health guidance is implemented, and it's so important that that happens. And as I said, the government will be announcing soon measures to look at how we can ensure that we are successful in dealing with COVID-19 while also meeting the needs of very essential parts of our economy.
It took a decade to recover from the last recession. Can either of you offer any sense of whether it's going to take that long to recover from this in terms of restoration of jobs and getting back to a surplus? And from this crisis, is there a lesson to be learned in terms of a greater need for government to focus on social justice issues? I'm talking about things like how the COVID payment is set at €350 a week because the current job seekers' payments aren't considered enough of a safety net. The issue of a living wage rather than a minimum wage for workers that we now know are very essential, like shop workers, cleaners, bin men, that sort of thing. Are these workers going to be taken care of in the years to come or forgotten about once the crisis is over?
So if I look at the document that was published there last week between my own party and Fianna Fáil, it does make a specific reference to the living wage and looking to make progress on that over the lifetime of this Dáil, in recognition of the contribution that many frontline workers have made in different parts of our economy to dealing with COVID-19. It's also worth noting that in our current public pay policy, for those who work for our public state, for the Irish state who were paid the least, these are the very workers that were prioritised for the quickest possible recovery to their pre-crisis earnings. And in many cases, those workers who were on the lowest income saw their wages respond back or move back to higher levels than they were before the crisis. And those kind of workers were prioritised over middle income and higher income workers within our public services. In relation to the pandemic payment is anchored in what you would pay, what you would make available to a citizen who is on receiving a income support from the state and would have an adult dependent upon them. So actually the €350 payment in many cases reflects what many who are depending on the state completely for their income were already getting. And this was a really important element in the decision that Minister Doherty and I made to increase the pandemic payment. So if you look at that from a social justice lens, you would have to also look at that in the light of the fact that a citizen in our state who had somebody depending on them was at a level of income already comparable to where the pandemic payment was. So that's always an issue that has been very important to this and to previous governments. In relation to us taking a decade to recover, Cormac, on your first question, I mean, there are a number of very important differences now versus where we were a decade ago that John and I have spoken about on different points and include in this document today. The first one is we do not have a private lending bubble within our economy. And this is of huge importance for looking at the economic harm that we may have to recover from. In fact, many Irish companies still have levels of lending that is massively below where they were before we went into our last crisis. And that is a massively important quality of our economy. And the second one is as is touched on in this document, is that many of the factors that would point to weakness in our national finances are not present currently in our economy or in recent years. We haven't had a balance of payments deficit. And for example, yesterday we refinanced a gigantic government bond, and we did so from our existing cash reserves. And they are very important strengths given where we stand now. This document does make clear that next year we can see our economy move into growth again. Next year we can see employment growing again. Next year we can see a very high level deficit for this year reduce again. So as soon as the second half of this year, if we get to the right place with the public health of our country, and if we can sustain that improved public health for next year, we'll see unemployment come down, we will see our deficit come down, and we will see incomes begin to recover again. We did not have that experience when we went through the last great financial crisis. But again, what the Stability Programme update emphasises is that all of this is dependent on where we end up with the virus and our efforts to combat it here in Ireland, and it is also dependent on what happens in public health in our main trading partners. But if the scenario that we are identifying were to happen in 2020, then in 2021 we would see improvements, and in 2022 it's very possible that we then would begin to see an economy that in employment and income terms would be quite similar to the economy of last year and the early part of this year. Well, I'm determined to do all we can to make sure that doesn't happen. And I have spent nearly 4 years working with the Taoiseach, with the last Taoiseach, and with my colleagues in the Department of Finance and in the Department of Public Expenditure to get our finances and our economy in the best shape that we can. And I am absolutely determined, as is the Taoiseach, to do all we can to make sure that we don't face the kind of decade that we have just exited from. I also have to acknowledge in making that statement that we are in a position of great uncertainty, and there is so much that needs to happen economically that is also dependent on our success with public health. And this goes back to Sean's question of earlier on in this press conference about trade-offs. The foundation is to get confidence in our public health in place first, and if the right decisions are made globally, I believe over time we can return our economy to a good place.
Maybe Cormac, I think you addressed the question to myself as well, and I would agree 100% with what the Minister said. Maybe just to add my tuppence halfpenny, the origins of the current crisis is very different from the global financial crisis. 12 years ago, it was the financial sector that was the epicentre of the global financial crisis, and that spilled over into the real economy, having major balance sheet effects right across the private sector and public sector. So household balance sheets, corporate balance sheets, even financial sector balance sheets and so forth. And there's a very important piece of economic research and history in this area. It's by a paper called, it's by Reinhardt and Rogoff, which shows that balance sheet recessions are much more severe and that the recovery from balance sheet recessions are much more drawn out. Okay? And that's one of the reasons why it took such a long period to recover from the financial crisis. But as I say, the origins of this crisis are very different. As the Minister said, it's a health crisis feeding into the real economy, but the real economy right now does not have the imbalances that characterised the situation a while ago. The Minister mentioned the balance of payments now being in surplus, no credit growth and so forth. So I think once the health crisis is resolved, the Irish economy is sufficiently flexible, sufficiently adaptable, and without the balance sheet effects that we had a decade ago, because household balance sheets are in a much better position, the corporate sector, especially the SME sector, balance sheets are in a much better position. So I don't think that sort of balance sheet recession that sort of characterised the previous decade would apply on this occasion. So I would be more optimistic. But it all is, as the Minister said, dependent on the resolution of the health crisis.
Minister, you spoke about wanting to keep going with Sláinte Care and build more houses. But in your negotiations now with smaller parties, how much fiscal space will you be telling them that is available? Given that as well, that doesn't take into account any new policies such as supports for SMEs and things like that. Can you give a clear figure to them about what that'll be? Secondly, when you unveiled the COVID payment, you said that the resources of the state were finite. Is there how long can it be sustained for, and is there a risk at any point of it, if this crisis goes on further, that the payment could be reduced?
Was the latter question was about the pandemic payment or the wage subsidy scheme? Or is it both? Sure. So firstly, in relation to the latter question about where we are with the pandemic payment and the wage subsidy scheme, with the pandemic payment, myself, Minister Doherty, Minister Humphreys, will begin to engage soon regarding the future of that payment and how, when our public health guidance allows it, we can begin the kind of change that is needed to support the incomes of those who don't have a job, but also to encourage and allow citizens to move into a job. And I think the way at least some of that will look like will be gradually moving those who are in receipt of the pandemic payment into our normal welfare code. But that is going to take time to happen because there's so many hundreds of thousands of people who are currently in receipt of the pandemic payment. But because the pandemic payment already does relate to the kind of incomes that many will get if they're completely depending on income from the state to maintain their living standards, I the key thing that we'll need to do there is, over time, is gradually move on to normal welfare and normal social welfare policies. But that is something that myself and Regina and Heather have to begin work on. And we will, along with the Taoiseach, along with the government, in the coming weeks, outline how we would do that. In relation to the wage subsidy scheme, we will have to taper the wage subsidy scheme over time. And we will need to do that because as we have more citizens return to work, and as our economy and our domestic economy begins to recover, we will see the ability of employers to pay wages increase. And my expectation then is, as that increases, then we will have to change the subsidy. We are in a position to obviously fully implement the subsidy as it stands for, I believe, the next 8 to 9 weeks, which is for how long it continues to be in operation. But then after that point, decisions will have to be made regarding how it is maintained. I would have to take those to Cabinet, look at how we will do that in a graduated way. But over time, the subsidy scheme in particular will have to be tapered and will have to be changed. In relation to fiscal space, the uncertainty that we are operating in at the moment is simply too dramatic to be able to give expectations regarding exact fiscal space across the coming years. And I will do my very best to outline to other participants in trying to form a government what progress that we will be able to make. But to say that I can predict now exactly what kind of resources are going to be made available for every budget across the next 4 to 5 years just isn't consistent with the picture that we have painted today. So what we will need to, I hope, be in a position to agree with other parties who may want to enter into government is broad priorities over a 5-year term and with as much detail as we can. But we are operating in an environment of very high economic uncertainty. And because of that, it will be very difficult for me to be able to give exact predictions regarding what kind of resources will be available budget to budget. I do want to emphasise one point that I think I said to Robert, which is that as our economy begins to recover, we will need to gradually reduce our deficit and get to a position of broad balance over time. Progress in reducing our deficit in recent years, getting to a balance and then getting to a surplus for a couple of years has been shown to be now of huge importance. And we would need to, as the framework document acknowledged last week, do the same again.
Minister Danny McConnell from the Irish Examiner. One of the key components, back to Arthur's question earlier on about the austerity or the need for austerity, one of the key components was the requirement to adhere to EU fiscal rules over the last decade. Micheál Martin in recent days has talked about a greater tolerating greater deficits, etc. like that. Has there been movement from Europe, or do the fiscal rules still apply as normal, or has there been some sort of forgiveness or allowance given to our deficits? And secondly, I suppose, in terms of the National Recovery Plan, can we be absolute in your talk about not reducing spending? Because there's one thing, I suppose, overall spending may increase, but specific projects like so, and will there be timing issues around certain capital projects that were, I suppose, the first things to be, I suppose, let go a decade ago?
Sure, thanks, Daniel. So in terms of the fiscal rules, because the fiscal rules are enshrined in the treaties of the European Union, they will continue to be applied. So what I do expect to see happen later on in the year is a very, very large number of countries go into the excessive deficit procedure, because that's currently in law. But as I mentioned in my speech earlier on, the European Commission have now triggered an escape clause within those laws, that what I think is likely to mean is that debt that is directly a consequence of dealing with COVID-19, or even deficits that are directly attributable to COVID-19, will be seen in a different way by the European Commission from other costs that could develop in any year. All that being said, leaving aside the European Union for a moment and leaving aside the Commission, the groups that determine whether your fiscal deficits are affordable or not are the decisions the financial markets make in terms of what bond yields they require on new government debt that you issue. And ultimately, that is the decision that is made collectively by them that determines over time if your deficits are affordable or not. And the NTMA in recent weeks have shown the value of what happens when a country is perceived to be creditworthy. And in order for us to continue to maintain that reputation and therefore to be able to continue to fund borrowing that we would need, we would have to, over time, show a path of how this very large deficit that we're highlighting is likely to develop at the end of this year, how that would be reduced over time. In relation to your question then on particular capital projects and in relation to how they could be protected, it's very possible that there are capital projects that might just get deferred or delayed for reasons that are completely independent of government. Those who are, for example, involved in the procurement process might decide they can no longer continue with the procurement process. Very large companies might decide there are projects they want to deliver in other countries. All of those things can happen independently of any decision that government makes. All I am saying, which I said on a number of occasions before, that I think we should make all the efforts that we can, that, for example, commitments and projects that we have in relation to public housing, in relation to public transport, that we try to prioritise those projects as part of our recovery. Because it's the way we can help get people back to work, and it is the way in which we can ensure that social needs that we know are still there, even as we're all dealing with COVID-19, that we can meet them. So for me, what those projects are going to be, much of that does depend on where we're going to end up later on in the year with COVID. And at that point, either I and the next government, I think, will be able to be clearer on that. So all I can give you now is that kind of broad view on the importance of projects. It may mean it is possible to deliver projects, for example, in a way that is different to where it could have been a year ago, 18 months ago, because the kind of overheating that was such an issue for me over the last 12 or 18 months is clearly not an issue now.
Maybe just one sentence just to add to what the Minister has said. For this year, in terms of financing the deficit, there is a very important backstop, and that is, of course, the ECB, which will buy 750 billion of euro area debt, an additional 250 billion beyond that by way of QE4, as it's called, and some additional measures. So for this year, that's an important backstop for being able to finance our 7.5% deficit, should the need arise.
You said if recovery is delayed beyond the first half of the year, if it doesn't start in Q3, well, then the deficit could be 30 billion this year, 10% of GDP.
Up to 30 billion,
up to 30%, up to 30 billion. What would the contraction of GDP be in that scenario?
These are the ones over here, Arthur. Okay, so I think if I can't read it here, is it 14 and 15? I think. Okay, all right.
I'll get you the exact date. shortly after this. It began Friday 3 weeks ago, I believe, when the legislation passed.
And just sort of one other thing on the impact of later in the year, has Brexit been factored in?
It's again acknowledged as another risk here. I mean, this goes back to the question that was put to me earlier on regarding, can I say with certainty regarding what's going to be available budget by budget. We are assuming a resolution of the current Brexit negotiation. Clearly the British government have given an indication there last week regarding where they want to get to. And there is lots of uncertainty surrounding our country at the moment. But the message from me is that once we get our public health to the place we want to get it to, we are in a position where we will be able to build our economy again. We are a credit-worthy country with a very, very diverse, very innovative economy, and we will harness all of those qualities to rebuild our economy. And as it is the case with our public health, it is going to require time, it is going to require a national effort, and it is going to involve political leadership to make that happen. But we will put all of that in place. And despite the uncertainty that this document has highlighted today, I am very confident that we can build incomes and jobs for Ireland again. Thank you.